So there's a lot of fuss lately about this idea of a 50-year mortgage. Is it good? Is it bad? You hear some conflicting stories online. Let's talk about it. Welcome to Dre's Take. Hey folks, I wasn't even gonna make a video, but while I take a little break here to get some steps in, I figured I'd touch on this hot topic around this 50-year mortgage idea that's been proposed by President Trump. Seeing a lot of fuss on the internet, people saying, oh, it's a terrible idea. Why not 200-year mortgages? You'll never pay it off. And by the time you do, you'll pay 4 times the amount in interest than you did for the home. Another argument that they make is you won't pay down, you won't amortize the loan fast enough to build any equity. I want to address both of those issues. Are those points true? Sure, if you're only looking at half of the story. The other half of that story is this. Most 30-year loans that people take out now are only active for 7 to 10 years on average. Less than 20% of people actually take a 30-year mortgage to term. Within 10 years, most people sell or refinance for one reason or another, maybe to pull some equity out to do some things around the house, or maybe because interest rates got better. Maybe they even refinance into a shorter term, a 15-year, for instance, or a 20-year, and shorten the term length of their payments. So even the amortization schedule that you see on a 30-year mortgage is 2 or 3 times the amount that you actually paid for the house. But nobody actually ever pays that. I mean, very rarely, very few people actually ever really pay all that money. Most people satisfy those loans through refi or sale within 10 years or so. So this idea that you're going to be stuck with this 50-year mortgage forever and you're going to pay all this money out, it's irrelevant. It's irrelevant. Nobody's going to stick in a mortgage for 30 years, let alone 50. So that's the first point. The second point you have is, oh, you're paying so little towards the principal, you'll never build any equity. It'll take you forever to build equity. The loans are all front loaded anyway. And so whether you're gonna have a 30-year mortgage or a 50-year mortgage, in the first 5 to 10 years, the majority of your payment goes towards interest anyways, because of the way these loans are designed, because these banks want to get their profit extracted as early as they can, because they know that you're not gonna take the loan all the way to 30 years. You're not going to pay all 360 payments. So they structure these loans to make the bulk of their profits in the first 15 to 20 years. So whether you got a 30-year mortgage or a 50-year mortgage makes really very little difference. You're not really paying much down on the principal anyway. So the people who take a 30-year mortgage out, for instance, and then sell within 7 to 10 years, the bulk of the equity that they accrue and walk away with to do other things with is actually achieved through appreciation, not the amortization. Very, very small percentage of the equity that they gain is from the amortization of actually paying the loan down. So there's point number 2. These people are out of their minds. These are the same people who tell you that buying a home isn't an asset. This is nonsense, absolute nonsense. I'll tell you a story right now about a guy who bought a house in 2016, paid a little bit of it down. In the 7th year, he refinanced that home into a lower mortgage rate. He took out some cash, but he only took out back up to the original loan amount that he originally took out. Did some updates to the house and forced some extra appreciation, some extra value. Since that house was bought in 2016, it's tripled in its value, which was absolutely life-changing. I know this story to be true because that person was me. Now, I've got an existing mortgage that's less than half what your average renter pays for a 1-bedroom apartment right now, for a 3-bedroom home that I own. And I've got about 65% equity in this property. Maybe more, probably 70. Either way, you're gonna tell me that's not an asset? It's absolutely life-changing. My take on a 50-year mortgage is, in a free market, the more options consumers have, the better. Especially when they have to compete with these hedge funds that have moved into the single family market and they're snapping up single family homes to rent them out. They want you to be a nation of renters, okay? So it's in their best interest to keep competition low. So who do you think really doesn't want you to have this opportunity to potentially qualify so you can actually compete with them for these assets? You guessed it. So just be wary when you see these news cycles and then these agents and whatnot who just follow whatever they read on Inman or whatever, and they think that they know something. I'm not saying that it's a one size fits all. Everybody's situation is different, and you got to look at which options suit your situation and have a plan or exit strategy for anything that you get into. You got to look at it like an investment. And having another option doesn't harm that. It doesn't hurt you. If anything, it could be the one thing that gives you the leg up, one thing that actually gives you the opportunity to fix your living expenses, to build some equity, to have decisions to make financially down the road that you otherwise wouldn't have at all if you just spend the next 5-10 years throwing your money away on rent. And I know what people are going to say, oh, he's a realtor. Of course he'd say that. No, I'm also a person. I'm a person who's done what I'm advising other people to do, and it worked out for me in a massive way. By the way, saying that somebody's a realtor so his opinion doesn't matter on real estate matters is kind of ridiculous. That's like, do you go to the dentist for medical advice about your heart? Do you consult a school teacher on legal matters? No. You go to somebody who's a practitioner in the field, who's been doing it successfully for a while, and you would assume that would add some credibility. But apparently these days, everybody's logic is backwards. So you having options to secure an asset, grow equity through appreciation, refinance, or sell that home and have some real down payment money to put into your next home so that you don't have to take out a 50-year mortgage. They don't want you to do that. That's a bad idea. Don't do that. These people are full of it. Again, I'm not saying one size fits all. I'm not saying that it's a solution for everybody. No, it's not going to save you, thousands of dollars a month, but it could be the difference in your debt to income ratio and whether or not you're even approved at all to even purchase a home. And it could be the ticket to actually gaining control of an asset and growing that equity and having some financial decisions to make in the future. That's a good problem to have, trust me. I'm gonna get going. I've got some stuff to take care of. I wasn't even gonna make a video, but I decided to jump on here and touch on this for the weekly email. Excuse my attire and the sun behind me. I know it's not the most professional video today, but I think it's important. I think what I had to say here could help some people, whether you're against it and don't like the idea of it, or whether it's the perfect solution for you and your situation. If you want to talk more about it, if you got some questions and I can help in any way, feel free to reach out. Till next week, that's Dre's Take. All right, y'all.